Everyone.
Hello,
Logan
everyone.
Hertz with Hasseltine LLC. We have a returning guest, our resident disability income insurance expert, Ben Feigenbaum. Ben has 40 years of experience doing disability. Wow.
Well, don't want to think about it.
Wow.
A lot of
Yeah.
years.
This is why I say I can offer comprehensive solutions, but I don't try to be an expert in everything. Anyone who does is just lying or their knowledge is very superficial. I know enough to be dangerous with disability and health insurance and other things. I stay high level and integrate everything together, but I'm not the expert in any one of these things. That's where I go to people like Ben Feigenbaum. It would be ridiculous for me to do it myself when I have a guy with 40 years experience who can help me do a lot of things. Like, as an example, please send me any disability coverage you have today, whether through your employer or individually owned. We'll be happy to review that for you for free. At the very least, Ben can usually help you understand what you currently have, because most people who sign up for, as an example, a group disability policy have never really taken the time to understand what coverage they have, what are the limits. We can help you file a claim. Lots of things we can help you with. But let's take a step back, Ben. We've talked about this on the show before, but for someone who doesn't know anything about the subject, what is disability income insurance and why should anyone care?
It is insurance to protect your income, arguably one of your most valuable assets, your ability to generate income over a lifetime. And that's what provides our lifestyle. Disability insurance protects your income and ability to generate income.
Right. Good point. It protects your income. It's not the same as health insurance. If you become disabled, this replaces your lost income. If you're unable to work, hopefully you have health insurance or health sharing that would pay directly for your healthcare costs. This is not that. This is replacing your income. What if you were making $150,000 a year and now you're making nothing because you're not able to work? And also,
That's
it gives you the ability to take a long time off without stress, because now you know you can walk away from your employer for a period of time, actually get better, as opposed to having to continue working when maybe you shouldn't, to keep that income going. I think this is a key gap in a lot of people's plans. We talk about the foundation of a plan, which is your protection. Life insurance is a component of that. Obviously, there are different components of it having some amount in savings. But one of them that is often overlooked is disability income insurance. Why do you think that is, Ben, and how does it impact people not having the right disability coverage?
most people aren't thinking about it. Uh, Life insurance is something that's advertised a lot on television. People understand and accept that they could die or die prematurely. But or a disabling event is not something people think of as a catastrophic financial event, but it
Mhm.
is, especially if it lasts 2, 3, or 5 years before you recover from a disabling event, an injury or an illness. And it can be a financial bankrupt you. Almost 50% of the mortgage foreclosures in America are due to unplanned illness or injury.
I have a I have a prospect I'm talking to right now. He got cancer twice and it wiped him out financially twice. It wiped out everything in his retirement account. He recovered, he got better, but meanwhile, it wiped out everything he had financially. If he had had good disability insurance, that probably wouldn't have been the case. It wouldn't have interrupted his financial plan. And we should mention you can have a critical illness policy too, which is not the topic of this conversation, but that can be another great complement where we'll pay you just a lump sum amount like 50,000, 75,000, up to $500,000 each time you have a qualifying event like a cancer diagnosis. So let's first talk about the most obvious use case. Let's say you're a high income earning white collar person, whether a business owner or employee. And let's also say I have some kind of group coverage. So, Ben, I'm already covered, right?
Yes, you have insurance, an insurance policy that was purchased by the employer, and we should review it. But let's say, for instance, you're an attorney or a salesperson, or you work for a company. Usually, the group disability insurance, if there's any there at all, uh, is only going to cover 60% of your base pay. It's going to come taxable, and they're going to reduce by Social Security or workers' compensation awards. And for a lot of us, getting 60% of our pay taxable if we're even eligible for that type of claim, and then there's an offset for Social Security or workers' compensation, is not enough income, and the definitions are very stringent, and that's already provided by the employer. So we need to read that, help if there were a claim to occur, to help someone fight for their rights inside their group plan.
Mhm.
But suffice to say, it's usually never enough, especially for the high wage earners. There's no bonus and overtime covered, and certainly the benefits are designed to be so low, the replacement ratio, that someone will want to come back to work and stay in the claim.
Right.
That's why it needs to be
Right. We can supplement that. Keep your group coverage. We can supplement it with an individual policy. Another thing I always like to point out is you don't own your group policy. So it doesn't protect your insurability. If you have group coverage, something happens to your health, and you then work for a different employer who does not offer disability, now you cannot get disability coverage anymore, because if you try and get your own individually, you're no longer insurable. Or maybe it's just more expensive because you had some kind of illness or injury, or there's an exclusion. This happens a lot more often than you might think, where we're going to exclude anything related to your lower back because you had some minor back injury and you were seeing a chiropractor, right? Or we're going to exclude cancer coverage because at your latest colonoscopy, your doctor told you everything was fine, but he actually removed a polyp that was precancerous. So we're going to remove all cancer coverage. This happens a lot more than you might think. That's a pretty big hole in your disability policy if it doesn't cover cancer.
And how it adds that disability insurance coverage is not, when you own, when there's health insurance provided by the employer and there's a claim, the money's sent to the doctor or to a third party. It's not sent to you to then go pay the doctor. With disability insurance, the money's coming directly to the recipient who's home fighting cancer or got life flighted and had an injury from a car accident. So they want to make sure that replacement ratio is low. And so we need to consider supplementing it, especially for the high wage earners.
Right. Your employer wants you to come back to work.
And the
Maybe you
insurance
don't.
company wants to draw a claim.
Right.
The disability insurance company, the cost for group disability insurance for, let's say, a 50-year-old executive might be 15 to 25 cents on the dollar versus the cost of an individual plan. There must be a difference between the two contracts. And you, the executive, you need to learn about that.
Yep.
And that's what we're here.
Now let's talk about a couple of other use cases that I have not talked about on my show. Ben, you want to bring some of those ups?
There's other gap coverages that the typical executive, he or she, are not thinking about. For instance, if you have an accident, my wife's best friend's husband was body surfing and broke his neck. He had two children under 10 years old and a dependent wife. Income stops after that. This is a problem. All you have is group coverage and or individual coverage. There's no money going into the 401k. So there are 401k completion disability programs that we put in place. In addition to replacing your income, we want to make sure that you have money going into the 401k for retirement for you and your family. For
Excellent.
business owners and key people, we have key person coverage that we put in place for key persons that bring a lot of revenue into a firm or are rainmaker type person. And there's also buy sell for life and disability insurance for partners of firms, because the equity of a business is separate from your income and your 401k.
Excellent. If you're getting a 401k match, that's something that stops when you become disabled. And then there are other riders we could go into, like there's student loans as well, where your benefit will increase so you can repay your student loans if you still have those outstanding, things like that.
That's right.
And I have a policy here that I've gone through in a previous call, but let's pull this up. This is a policy on our friend John Smith, and I went through this in a previous video, a two-part series, but I wanted to get Ben's thoughts on this. Ben, this might be the first time you're seeing this policy. What do you want to call out for the audience? What do you think is important for them to see about how a disability policy can help them, or which riders do you think are important? What do you want to highlight here?
When someone becomes disabled, this is different than a death claim. Someone's dead or they're not dead. Here, there's a injury or illness, and insurance carrier has to figure out whether you're totally disabled or partially disabled. And the claim might switch. It might start out total and become partial. It might start out gradual and partial, like a bad back, and then become total. And so the contracts cover those contingencies. It's very fluid in how it works. And so there are provisions in the contract to address any of those issues. So for someone who's self-employed, like a dentist, the residual, which is 3 riders down on this list, is really important. It's partial benefits for partial loss, like a light switch. It's on or off or dimmer switch. Well, that dimmer switch money for a dentist who may be recovering and rebuilding their practice and having relapses as they rebuild their income, this insurance contract addresses that dimmer switch and switches off when their income comes back based on a liberal formula in the contract. So that residual or dimmer switch money might be important. That's very different than the members of a family business, where if a brother becomes disabled or a sister, when do they start salary and turn salary off? And so that's different than the self-employed person. And we want to address each of those types of customers or income earners, address each of them with this contract and how it works.
We did this in another video, so I'm not going to go too deep on it, but I want to point out this protects your insurability because it's non-cancelable, which means this policy stays in force and the premium cannot be raised for your whole working life or as long as the coverage is in force. And you can add more coverage. So not only does it protect your insurability at your current income, but any future income increase, most of us, hopefully our income goes up over time. You can increase the coverage without underwriting. So that to me is super important. Your insurability is protected.
The policy cannot be canceled. The coverage cannot be canceled, and the rates don't go up during the length of the contract that you own. There's a lot of predictability for persons that choose to own income protection insurance.
Right. Your homeowner's insurance, your car insurance, the rates are probably increasing every year. Here you can lock this in and never have a rate increase for as long as you keep the policy in force.
And add to the plan if your
And
income goes up, add to the plan and buy more. And let's say you've developed a pre-existing condition, they don't exclude that condition as you add to the coverage. And that's a fabulous feature inside of the policy if you have progressive illness, like MS or a bad back, and you know that maybe 4 or 5 or 10 years downstream, you could potentially be a claim. You're still able to work, buy more coverage for the claim that may occur in the future. And that's just a powerful, powerful contract right for the customer.
And the most important thing that comes from this is peace of mind. You will make better financial decisions. Everything about your life will improve if you have the peace of mind that a good, well structured, robust policy like this can give you, knowing that no matter what happens, I'm set. And I've had clients tell me this. They're like, wow, I feel so much better now after I've gotten my life insurance and my disability insurance in place that I know my wife and children are going to be fine. I don't have to worry about this. And I think also, too, if God forbid you do have some kind of an illness or an injury, this also helps. People who have not been through those scenarios don't understand the tremendous psychological impact that finances can have. I guarantee you, how the heck am I going to pay for this? It's going to be top of mind. Yes, you want to get better, but healthcare can be expensive. And what if you have to leave your job? Just having the peace of mind knowing that my income is going to continue while I deal with all this. So I can actually take time off because a lot of people will keep working when maybe they shouldn't because they feel like they have to. They need that income. This would give you the option to say, I'm actually going to take 2 years off and really get better from this cancer before I go back to work. And I can do that safely. And then this shows how the premium would vary if you chose different coverage periods, different benefit periods. A 90-day waiting period is typically what's selected. This is intended to cover long-term, not short-term disability. Benefits would kick in 90 days after you have the illness or injury. You can have it cover you for 2 years, 5 years, 10 years to age 65 or to age 67. Typically to age 67, it covers you for your entire working life. And that's important. Not only that, you can actually keep it in force to a limited extent to age 75 without underwriting. So that's good to know because a lot of people are working into their 70s.
We try to keep premiums around 1 to 2% of income or lower. And I would argue to my brother or best friend, if you could keep 98 or 99 cents of every dollar you earn and have a great disability insurance program, income protection program, shouldn't we consider that? And there is how public should look at this insurance. It is an obscure insurance and it's not presented enough to the public. So I applaud you, Logan, for presenting this. Mostly physicians, attorneys, business owners buy these programs, but the average person needs high quality disability contract protecting their income.
Almost always when I talk to people and when I hear about why their financial plans have failed or why they're behind is almost always health related. Something happened to their health that put them out of commission for a period of time and they had to recover and it set them back many years. This would allow you to safely address a scenario like that where it would not interrupt your plan if that were to happen. And then this goes through more commentary around how much you're covered. This is an important number that I want to highlight $6.75 million. Dollars. This person is earning $250,000 at age 40. If they keep earning that to age 67, that's how much income we're protecting. It's a pretty big number, right, Ben?
Yes. $6 million ban.
Then we have the catastrophic disability benefit. If you are disabled, it covers about 60% of your gross annual income. Now, this would be tax free, though. So if your employer is
Correct.
paying for your disability coverage, that's good and it's bad. It's good because they're paying for it, but it's bad because now if you go on claim, that's now considered taxable income, right?
And the contract provisions are more stringent and you cannot do anything about it. It's already in the way. Even if you said, I don't want my group plan, you're not able to opt out. So we can only
Yeah,
add
in some cases you are if it's voluntary. So what are some of those
very
stringent contract provisions that you see in group plans that are not in individual plans?
well. The definition of disability is not going to be specific to someone's occupation. It's technical, but if you have a fall or an accident and the disability contract at work says you have to be totally disabled from any job or occupation you're reasonably fitted for by education, training, or experience, then the claims office of the insurance company is going to be deciding if you're still on claim, unless you're in the hospital and in intensive care. And that's a bad thing. You want to have the most liberal contractual provisions, and they're apples to oranges between a group contract and an individual contract that's out in the marketplace as it relates to how they define what your job or occupation is. That's the first big one. The second big one is there's not a lot of dimmer switch features in the group plan. They're designed for that. It's not all about staying home and earning some income, like the dentist story who's self employed. And so that's missing. The benefits come taxable, less Social Security or workers' compensation. You'll be forced to apply to Social Security. Otherwise, they'll automatically reduce your reward. There's no cost of living adjustment in the group plan. If you're long term disabled on a group plan and we have inflation, 10 years later, you've got a problem. Let alone the definition. There's also caps in a group plan. They're only going to cover 60% of your base pay up to a cap. That cap may be significantly lower than your actual income, covering bonus and overtime, and it's coming taxable.
Right.
An analogy might be health insurance. If you were provided health insurance at the same employer and you were the top executive or top group of executives, and the plan reverse discriminated against you, so maybe it only covered 30 or 40% of a claim.
Mm-hmm.
Even if you're eligible, it's only 30 or 40% covered. Wouldn't you look to supplement that or at least understand what might happen? And that's what group disability insurance delivers to the top people at companies. And it's designed that way.
Yeah. So these are important caveats that people find out the hard way. Unfortunately, they just check a box and say, yep, I'm covered. I get it through my employer. And my response would always be, great. Why don't you send it to me and I'll take a look at it? Because you probably never looked at it in detail. You've certainly never had someone who's got 40 years of disability experience to look at it and at least help you understand. And if you're okay with all those limitations, at least now you know. Police. I'll give you an example, Ben. This was an individual policy, not a group policy, but a client sent me his policy and I pointed out to him, he didn't realize this. I pointed out to him, there's an exclusion for anything related to your back on this particular policy. I think it was because maybe he had some minor injury and was seeing a chiropractor at the time. And I pointed that out to him. What a nasty surprise that would have been if he had had some horrible back injury, filed a claim with his disability policy, only to find out that is specifically excluded from your policy and we will not cover you for this event.
Back injuries are always a challenge. When we underwrite, if they do exclude some portion of the back, we work very hard to have wording added. Because remember, might be a contract that takes 90 days before you're going to be eligible for coverage. It's long-term disability insurance. And so the person that's going to the chiropractor and they're excluding that, we still have wording in the contract that says they'll still cover that lower back if there's a fracture, laceration, or burn. So if they're in a car accident or a fall, it still covers them. It's just if they wake up with the sore, achy lower back that they're currently seeking treatment for. So those are challenges you're an expert at, Logan.
Well, no, you're the expert, Ben.
We'll
This is what I was going to say. This is why I work with Ben, right? These are the nuances that can
Yeah.
be super important that it would be unrealistic to expect you, the consumer, to understand. It would be unrealistic to
Yeah.
expect someone like me to understand it because I'm not living and breathing disability all day long. I offer it as part of my comprehensive solution. But when it comes to these nuances, I rely on Ben and outsource a lot of the heavy lifting to him so that we can make sure we get it done right. And with that particular client, we got him a policy working with Ben's team, and it had that same exclusion on it. But a year later, we were able to get those exclusions removed. That's something you can do.
Right.
And so now he's thankfully fully covered. We did a similar thing with a critical illness policy where they were going to exclude cancer. So we actually supplemented that with another critical illness policy that had different underwriting standards. So between the two, he's fully covered. So he has a critical illness policy and then a cancer only policy. But these are the nuances of underwriting and things that come up that you need someone who's a real expert to help you navigate that. I couldn't do it by myself. So that client is fully covered. And I think, like my other clients, his peace of mind is dramatically increased knowing that he's now fully covered for these different events.
And once you own the disability policy and that rider was lifted, you cannot add those restrictions back by contract.
That's right. And then this goes through a few of the included riders. Want to point out 90% of claims come from illness, not injury. A lot of people, when they think disability, they think about getting into a car accident. It could be that, but usually it's illness.
You might want to mention the presumptive feature. That's an important feature. If you are totally and permanent, that's a total and permanent loss of speech. This is for this contract, speech, hearing, both ears, sight in both eyes, use of both hands. So not only do they find you on the side of the road, totally disabled from your job or your specific occupation, but you have one of these what if claims. What if you lose sight in both eyes? They pay you from first day of loss.
So there's no waiting period,
So
no
there's
90-day waiting period.
no waiting. It's important. These are features that take care of people when something like this happens.
We say to age 67, but you can actually keep the policy in force to age 75. It will be a more basic policy and the coverage will be more limited. But that's really great because a lot of people are working into their 70s, and the likelihood of you becoming disabled, having some event, some illness in your 70s is much higher than earlier on.
And I have lots of customers over the last 45 years. My father was a disability insurance specialist. I see a lot of people in their late 60s, 70s still working and still pay for their policies.
Yep, absolutely. The older you get, the more valuable this policy becomes because as non-cancelable rates are not rising, and the likelihood of you becoming disabled, unfortunately, goes up as you get older. So it's one of those things people appreciate more after they have it than they do before they have it, unfortunately, which is sad. Unfortunately, a lot of people learn these things the hard way or they never learn them.
Today, we don't have the same kind of work at the same job and get a wristwatch at 65 and a retirement party, especially in the technology business. And we're working from home. So you see a lot of portability moving around, people jumping job to job to job. When you own an income protection contract like this, it's portable and it goes with you to whatever job you're in. And if the job's riskier job or you travel more in the future, it covers you based on what you do at the time of claim.
So important.
And that's
Yeah,
important.
that's so important. It goes with you wherever you go, no matter how many times you change jobs. Once you have that policy, it's in force. And to your point, Ben, we had a guy who he's working in more of an administrative role right now. So he has the best occupational class, but he has his MD. He was a physician. He could go back to being a doctor at some point in the future, but his occupation class would not change on the policy and he'd still be covered. So that's really important. You could,
Yeah, a good example might be an accountant who always loves manufacturing and they own one of these contracts and they decide they're going to build a manufacturing plant. They're out in the plant all the time. It covers them if they're out there, even if they're doing the work in the plant. So it goes wherever they go to whatever they're doing at the time of claim. It's
yep, that's so. These are some of the riders we already mentioned before. Own occupation, I think Ben mentioned, is very important, especially not only that the rider is there, but what is the contractual language behind it? How strictly or liberally do they define your own occupation?
someone who owns this contract is disabled. Their definition of disability is specific to their occupation and what they do at time of claim. The insurance company cannot show up and say, oh, there's a reasonable job for you to do. We expect you to do that job. If they're unable to do the substantial material duties of their job or occupation, then the switch is on. There's also the dimmer switch. So it's economic earnings to protect their income. Let's say someone were a surgeon and they lose an arm and they decide to author a book on coming back from being a one-armed surgeon off the mountain or from their injury, or they develop real estate or they start another job, they're still covered and protected in this contract and paid. It's important.
Excellent.
Because they can no longer be a surgeon. So it's important. That's what the own occupation is.
Right. So you can be unable to work in your primary occupation, but work in a different occupation and still collect benefits.
Correct. And no matter what, it's an economic claim, so you're covered economically. But if you have the weird circumstance that you cannot do your job, like as a surgeon or a salesperson that travels across the world, trial attorney, but you can work for wage or profit. They don't count those new earnings because of the specific nature of your occupation and the higher income that you earn doing it. It's very important. These are added protections for persons who have developed really good skill sets and they earn income from that and then need to protect
Absolutely.
their income from that.
Absolutely. It's huge. So one of the ways Ben Feigenbaum explained this rider to me is it allows you to do something that don't normally allow you to do, which is to profit from a claim. Because now you might be collecting your disability income, but you're still working in a different occupation. So your overall income is increased. I'm sure you've heard of the example of the dentist who develops tremors in his hands and he can no longer work as a dentist. So he collects his full disability check, but then he takes a job teaching dentistry to students. And so he's actually making more money as a result.
You could profit from a claim. We hate to say that, but yeah.
Nobody wants this to happen. Yeah, but that
Yeah.
explains the importance of own occupation, where
Right.
you're
It
not
it
penalized
it
if you take a
protects you.
different job.
Let's say you were life-flighted off of a mountain, you're a surgeon, you're blind, you're never gonna be a surgeon again. You author a book, Oprah picks your book up, you make more money as a blind author than you do as a surgeon. They don't care. You can't be a surgeon anymore, so they still pay you. So yes, you collect both of them.
And it's still not taxable income because it's an insurance claim. When you
Tax-free.
file a claim with your homeowner's insurance because your home burned down and they pay you $500,000, that's not taxable income. You're being compensated for a loss. You don't even report it. Same thing here. So it remains not taxable if it's an individual plan. Cost of living, this is a rider that indexes your benefits to inflation. So if you're on claim for a long period of time and there's inflation, this would protect you. Let's say
Right.
you had a claim at age 45, you would start in this example with $11,680. By the end of 20 years, it could go up to $53,000 a month if inflation were riding high. This only kicks in while you're on
Inflation.
claim. Let's be clear. It doesn't go up every year. It goes up every year if you're on claim.
Correct. Totally disabled. There's also an inflation adjuster inside of the dimmer switch or the residual feature called indexing. So if you're long-term partially disabled, my accountant had this claim, or the dentist who works half a day, that's what their doctor says for the rest of your life, you're only going to work half a day. So they have half a claim. and it always stays that way, then there is a cost of living adjustment built into the dimmer switch money to accommodate that. So these are internal contract features where Logan and I are going to make sure you have the best contract. That's the way, go back, catastrophic is early long-term care insurance. If you were unable to breathe, bathe, dress, not just the more sensitive triggers of disability insurance, they're going to throw more tax-free money in, potentially 100% of your income replaced. You're bedridden, so they're throwing this extra layer of money in, and it's important because most persons need some kind of care nurse, and replacing your income does not pay for the care nurse.
So this will allow you to receive 100% of your gross annual income tax free if you were
Or an additional benefit.
right. If you were
Right. In this case, it's another 9,100 a month in addition to the 11,600.
right. If you
Tax
were
free.
what they call catastrophically disabled, which is the same as the long-term care definition.
Unable to breathe, bathe, dress. There's a list.
Right. Or
Two
a
or more.
severe cognitive impairment like Alzheimer's or dementia. The next thing I wanted to cover is all of these carriers have limits. So if you are a high income earner, you might not be able to get your income fully covered with one of these policies once you hit the limit of what that carrier would provide. So Ben, you want to talk about how we can get those high income earners fully covered?
Yeah, even the individual carriers are going to limit how much tax-free insurance or replacement of your income that's available. If a person wants to have maximum coverage, let's say that's 70% of their gross income, tax-free. So to earn a tax-free 70% of the 100% that they were earning before, we bring in Lloyd's of London and plug in high limit disability insurance. It goes hand in hand with your individual policy. And for high wage earners, they purchase these higher limits to plug the gap. Because group coverage, individual coverage still isn't enough. So we plug the gap with this high limit.
Yep. And I'm
program.
working with someone right now. We got their individual policy in force. They have group, but we are supplementing it with individual. And now we're going to supplement with this personal high limit coverage because we've maxed out what that particular insurance carrier will give them. So if you are a high income earner, you may need to do this, and we do this all the time. The provisions are similar, but somewhat different. I don't know, Ben, if you had any comments on this one. We talk about disability, the definition. You can see some of the same benefits and riders here. So the residual rider covering you for partial cost of living adjustment, same kind of a thing.
Lloyd's is going to go hand in hand with the individual policy from a contract feature standpoint, including own occupation, which for a while they pulled back and then they put back in. Very important. So it's very important for higher wage earners, their income and lifestyles elevate to higher monthly income needs. And if something happens to them, where's the money coming from? Unless you have some source of income, if you're disabled, like real estate or inheritance, people are going to lose their homes, whether it's a $7 million home, $700,000 home, or $170,000 home. They're not going to be able to pay the bills if income stops.
Correct. We have the presumptive disability. Both of these cover recurrent disabilities, so it's not that uncommon for if you have, say, cancer, for that cancer to come back. This would cover you when it comes back. So I mentioned that clients before who had cancer twice, and both times it wiped him out. If he had had one of these policies, it would have covered him both times, and his income would have continued.
We write a lot of professional athletes also with this Lloyd's group, high wage earners, professional athletes. They understand the needs for these kinds of programs.
So, Ben, what do you want to tell our audience about disability income insurance? Why they should consider an individually owned. Now, we can do group policies too. Let's just be clear. So, if you're a business owner, you have employees, we can also do group policies. And if you are a business owner, maybe that's something you want to offer your employees.
I put myself through college and I was a benefits expert hired out of college. And so I put in place a lot of group health insurance, disability insurance. I understand those contracts very well. What I would say to anyone who relies on their income for their lifestyle, they should pay very close attention to owning some personal disability insurance to protect that income, to make their mortgage payments and at least cover their basic lifestyle, and to evaluate their group insurance at work. Let Logan and I evaluate that. And this way we'll have a copy of the contract. If something were to happen, we can help fight for your rights. And at the same time, you should consider making sure you own a personal protection plan to supplement any group coverage or in lieu of that makes sense for you. So that if something were to happen, you don't lose your and lifestyle. In some ways, if you die prematurely, you don't leave enough life insurance or no life insurance, the family could have the same problems. If they're going to go on somehow without you, this is a living death. You, the wage earner, are still going to be around. I have a very close friend who bought disability insurance, lapsed it, and now he's disabled, and it's fun.
No.
I wish he had that plan still. And so if he had that, he'd be protected for the rest of his life, and he'd be able to expand it and use it. And he needs it right now, and it would never go away.
Yep. One of my
So I would urge people. Go ahead.
Yeah, one of my key messages to people is to protect your insurability. If you're insurable today, you need to protect that privilege of being healthy enough to get insurance. A convertible term life insurance policy would do that because you have the option to convert it to permanent life insurance coverage, no matter what happens to your health. A non-cancelable policy with disability does the same thing, an individually owned non-cancelable policy where it stays in force no matter what happens to your health, no matter how many claims you file. The premiums do not go up no matter what. It's contractually guaranteed. And you can add more coverage and it'll cover you through your working years, whatever term you select, typically to age 67, but that's up to you. You can select a shorter term if you want. Wouldn't recommend it, but you can do 2 years, 5 years, 10 years, maybe if affordability is an issue.
Absolutely. And that's a really good point that owning something is better than nothing. Absolutely.
Okay, Ben, thank you so much for your time. We greatly appreciate you helping us to navigate disability income insurance, and we'll look forward to the next one.
My pleasure. Thank you for your time.